joined now by Sandip Agarwal, fund manager and co-founder Sowilo investment manager. Sandeep, very good afternoon to you. You know, the problem is that we've seen this story play out before, a bear cycle and then few sessions of euphoria. Question that comes to mind is that are we seeing short covering? Are we seeing an undersold market getting corrected, or are we seeing now a bull leg of the rally that will continue for some time? You're on mute, Sandeep.
Yeah, hi. Thanks, and thanks for having me on the show. So, I have a very different perspective. Maybe, not everyone will agree, but I will put my thoughts here. So, I believe that when COVID happened, then first time the whole world started looking that, their supply chains getting concentrated in one country in the world is not good for them. And they all started looking for options. And I think that was the reason that in post-COVID, you saw a lot of mid-cap and small-cap companies reporting good profits, good profit margin, good growth in profit, more actually on the improvement on the margin rather than on revenue growth, because there were a lot of restrictions to import to avoid the dumping of the products in the country, and also a lot of European, and I'm telling you first-hand experience, I've met many corporates, the exports have gone through the roof to Europe and US. And that was the reason that the market did so well post COVID. I think this is a second, and this is a much bigger jolt than the earlier one. And this time, while it may temporarily look very scary, but I believe that this will do wonders for the country, because the if you see the pre-tariff war started, the GDP estimates for all the leading economies in the world, and the gap between India and them was already stark. And now if you see the revised estimates, India's GDP estimates has cut by 20 to 30 bips, which is like 5% on the base. But if you see other economies in the world, the cut is like 30-35%. So we are become more attractive than anyone else in the world after this tariff. And I think this is a much bigger opportunity than what we saw post-COVID. So I think this time the whole world will agree to one thing, that you can't not be in India for your manufacturing and supply chain, and in turn investors will also realize that we need to be in India. So I think we will see a flush of money coming to India in next few months, and I'm very optimistic in the market. I was not so optimistic in last 2 years, but now the way things are panning out, I think we are in for a golden decade kind of situation.
Wow, what a mood changer that is. I haven't heard you sounding so optimistic, Sandeep, like that. Rajesh Palve also with us. Rajesh, are you feeling that mood as well?
So mood is already there on the prices, and the way Nifty has moved up 1,000 point in the last 5 days, that clearly shows that yes, everybody is now buying in the market, and now the broad-based buying action, which is clearly the indication that yes, this upward trajectory can extend further, and possibly Bank Nifty is just few point away from the all-time high trajectory. So I think. That clearly shows that there is a confidence the sector where there is no impact of tariff volatility. I think banking and financial, I think that sector has clearly given us indication that market is ready to move further higher, and Nifty is also following the same behavior. So we believe that yes, possibly we may inch up or scale up to the level of 24,000 level in the continuation of this up move. And I think this positive trajectory will keep on continuing for some more, week from here onwards.
Rajesh, with respect to Bank Nifty as well, what are the levels right now that you're observing? It's hardly some few points away from touching its life high. What are charts indicating to you right now?
So for Bank Nifty, clearly, I think the next target where we can see in next couple of days towards 55,000 and 55,500 as most of the private banks like ICICI Bank, HDFC Bank are now at all-time high trajectory. Again, the PSU banks also started participating in this upward momentum. I think SBI is also contributing to this rally, and we believe that we may see another 1,000 point rally can be there in Bank Nifty from here onward. So buy on dip would be the advice. Till Bank Nifty is holding above 53,600 mark, I think there is a possibility that 55,000 to 55,500 would be the next target in coming weeks.
Right, and from the basket of stocks that are seeing significant momentum in trade, what would you go ahead and buy right now?
So two stocks idea where we are focusing at this moment. One is from the insurance basket, that is SBI Life is looking very attractive. The way stock managed to give breakout of almost 10 to 15 week consolidation at the lower band, and now the breakout is clearly indicating that this stock can extend its gain. Even most of the insurance stocks are also contributing this upward momentum. So SBI Life, we are projecting target towards 1650 with stop loss of 1575. Another stock is that is Avenue Supermart. DMart is also looking bullish. The way stock has managed to recover all its losses from the October 2024. Now stock is managing to fill the bearish gap which was there in the stock weekly chart. Long built up is there in data. I think DMart can be looked at for buying side. Our target for near term perspective is 4460. Keep your stop loss around 4335.
Okay, so that's the view with regards to where Rajesh's picks are concerned. With respect to HDFC AMC, the numbers are just out and Harsh is taking a look at that. While he's taking a look at that, there are good amount of gains in terms of profit. The board has also declared a dividend of 90 per share. There is also total income, which is up by about 20 odd percent. Net profit is up about 18 odd percent for the counter. Harsh, if you've had the chance to take a look, what's the first cut? What is the read through right now?
Well, it looks like a very good set of numbers overall. 21% growth at a time and in a quarter when you've largely seen a correction overall. The stock reaction also quite decent in that sense, 2.5% higher. Sandeep, your view very quickly on the initial read through on the numbers?
No, so I think as you rightly mentioned, the numbers are all around positive, and also, the way it was not, it has gone through time correction. So I think this whole space of AMC is coming back. Very hard to comment, although on one specific stock, but I would say that the whole AMC space is looking very good. The whole NBFC space and the banking space. So this whole BFSI space itself is looking very attractive.
And what about Rajesh? What about your take on charts? How does HDFC AMC look on charts?
Well, stock now managed to give breakout about 20-day, 50-day moving average. Even 20-day moving average has given a positive crossover to 50-day moving average. So it's a sign of strength on the near-term perspective. Stock managed to give breakout of its previous swing high also. I think if its stocks sustain above 4160 level, there is a chance that again stock can extend its gain towards 4260, even 4320 kind of level. So I think those who are already long in trade can hold the position with trailing stop loss of 4170.
Okay, so those are levels on an HDFC AMC, dividend of 90 rupees a share, a healthy 2% dividend yield at the current price as well. 18% profit growth is what the counter has seen for Q4 FY25. So overall, a decentish kind of a set. I also keen to understand the view, Rajesh, with regard to something like an Angel One. That was the other one which took out numbers or came out with numbers. What's the sense like on that one?
So after correction, stock is now consolidating near to its 20-day, 50-day moving average. It's almost consolidation of last 4-5 week, but the stock not managed to give breakout of this range. So 2450, 2500 is the key level on the higher side. Once stock crosses these level, then we can see good rally in the stock, and then maybe short covering would trigger about 2500 level, and then possible target towards 2650, 2700 we may see in short period of time. But till the time stock not crosses those level, I think some consolidation in range of 2250 to 2500 would be there, and possibly stock may attempt to give breakout on the higher side, as on the lower side we have seen accumulation activities already happening in this stock. So about 2500, I think we may see a sharp rally towards 2650 2700 level.
One has made a full recovery in that sense from the day's low. And that was the sense that despite the weak numbers, are we starting to see a bottom here is essentially the big question. Both are guests suggesting so. I want to also quickly mark out that HDFC AMC, in terms of the PAT estimate, was 606 crore. PAT has come in at 638 crore. So surely a beat on that count. Stock reaction also suggesting that. So just want to put it out there. It's a very strong set of numbers overall from HDFC AMC as well.
HDFC AMC is looking good. Just the point on Angel One, I mean, I wouldn't give it too much credit of some great bottom being found, because look at this, is a rising tide lifts all boats. Then I want to see what's happening with the 361 and Anand Rathi, all winners through the morning. And, you know, the kind of move there, 361 come off actually its highs, but Anand Rathi started off well, now looking like it's in the dips. But, you know, we've been talking about an interesting story and something which is clearly a setback for HUL. Setback legally in a very small segment, but nevertheless, it's a rivalry in India's evolving skincare market that has spilled into the courts. Honasa Consumer, the parent of brands like Mamaearth and the Derma company, has filed a lawsuit against Hindustan Unilever, alleging that a recent Lakme sunscreen campaign undermines the credibility of its own product. Now, what this the court has said, the Delhi High Court has said, is very interesting. Sesha, I believe the court has asked HUL not to use the same color on its packaging as the Honasa product?
Yeah, absolutely. So the Justice Amit Bansal has asked HUL to remove the light yellow and orange color in the packaging and rather use any other color that is not close to Honasa's Dermaco product. In fact, the court has also asked HUL to say some sellers instead of online bestseller targeting directly Honasa's Dermaco products. Also, HUL has been asked to discontinue the current ad campaign, but they are allowed to run new ads with the modifications, and this include the both change in packaging as well as to say some seller instead of online bestseller. They have also been asked to remove the online ads within 24 hours and remove all the physical hoardings within 48 hours. Further, the case is now dismissed, and also HUL has agreed not to press suit in Bombay High Court filed against Honasa.
Okay, Sesa, thank you so much for bringing us that information. Sandeep, I'll take your view with regards to this, of course, and in terms of how competition is faring out for all these players, where the entire skincare and cosmetics segment is concerned.
So, I believe that India is a very, very big market. We have a growing population, young population with increasing per capita income, and, everyone will fight tooth and nail to get their share of market share. So this is something which will intensify, and I think it will be the survival of the fittest. So very hard to, comment on specific developments, but we are seeing this for quite some time. And I believe that, the good thing is that, ultimately the consumer will be beneficiary, because more superior products at a better price will be the outcome of this thing. And I think that is what will happen finally. So I believe that, with such a big market, these are bound to happen, and this will only intensify from here.
I wonder what's happening in something like a CE Infosystems. Absolutely flying in trade. Just picked it up right a couple of minutes back. Look at the spike on that stock. Rajesh, quick perspective with regard to this one, if you have any.
I think, yeah. So looking at the market momentum, I think CE Infosystem is also, participating in this rally, and the way stock has moved up, I think next target towards 1820, we may see in the continuation of this up move. So I think one can trail stop loss towards 1720 at this juncture to hold the position. I think 1800 to 1820 would be the next target for this stock.
Okay, Rajesh, let's quickly get your BTST ideas, if any. And this is the tricky bit. We're going into a 3-day break, so we'll have to wait and see what happens. But nevertheless, what are the ideas that you can share for the last 10 minutes or of trade?
So Eternal is looking attractive. The way stock has moved up and the breakout is already there on the near-term chart. So I think Eternal can be looked at for BTST perspective. Stock is comfortably holding above 20-50-day moving average and now negotiating with its previous swing high of March 2025. Long built-up is there in data. So I think one can buy this stock for 242 target. Keep your stop loss around 226.
Okay, so Eternal is the one idea that Rajesh is talking about as well. Another stock that has been buzzing is Vari. So it's very important to see the numbers that are going to come in because that's going to be a big push, and anything that looks like a better than expected Q4 is going to have an outsized reaction. That's what we have seen with Vari Renewable. They've reported an 83% jump in its consolidated net profit at 93.76 crores. Earlier today, we spoke to the company's group head finance, Abhishek Parikh, about their quarter gone by and their order book. Most importantly, we asked him why margins are down despite such an amazing quarter.
So 3.2 gigawatt roughly in terms of revenue would at the run rate of 1.1 crore to 1.2 crore per gigawatt per megawatt would convert into somewhere around 3,500 to 4,000 crore worth of minimum revenue at this point in time. But as we move ahead, we also have a large pool of talent for the business development and sales team. And every quarter we have been building our order book as well. Like last quarter itself, we have seen one of the biggest orders coming up, and especially in the second half of this year, we have seen our order book building as good as 2.5 gigawatt worth of order. Especially in that, I would again mention that we got a single largest order of 2 gigawatt at a single location, which probably is one of the largest order by any solar EPC company at this moment. Our current order pipeline, the total bidding pipeline, which we call for our EPC revenue, is around 30 odd gigawatts, which last year was somewhere around 20 odd gigawatts. So at 30 gigawatt of order book, we believe, we have a reasonable pie to look at because we have been consistently maintaining our market share also. And year on year, our pipeline increases and we have seen the impact coming into our order book as well. So difficult to give an exact number, but I can tell you our order pipeline and our overall bidding pipeline has increased significantly in last 12 months.
Okay. All right. So order book is looking strong. The margins impacted to some extent by EPC input costs and employee costs as well. But Vari on a roll over here. Sandeep, is this a stock that you like?
So, we run a PMS, so very hard to comment on any stock specific, but I will say that, solar is something which we love a lot, but it is very, very expensive. So not within our philosophy or within our limits to buy any of them. So we are evaluating them consistently. If they come in our range of valuation, what we can give them, then probably we'll look at them. But right now, everything in solar looks very expensive to us.
That's the tricky bit about solar and clean energy, if I dare say. I mean, I'm not putting both in the same context, but Vari is a different story and Gensol is a different story. Not saying it in the same context, but for companies in that space that have the ability to make very big claims, then you have to actually see if they're running through and what their cash flows look like. But on the charts, meanwhile, Rajesh, are you liking Vari?
I have very limited data for this Vari renewable, and I think looking at the technical, stock is in uptrend only, but still difficult to comment because limited chart for me. But looking at structure, 1060 is the key support area for near-term perspective. Which sustain over these level, I think really can extend further, and I think 1200.
So are you looking at energy? Are you looking at Vari Energy?
No, Vari renewable.
Vari Renewable, right.
Yeah.
Okay.
So Vari Energy is having data, but Vari Renewable is
Yeah.
having limited data.
Yeah. Okay. No issues at all. In terms of, Rajesh, let me also get your point on some of the auto companies right now. For EV plays going to be in focus. Auto again, one sector which was quite beaten down. Will we see that kind of recovery? How are you liking a Tata Motors, for example?
So after the corrective move, Tata Motor is trying to get some buying interest at lower level, but still structure is weak. Stock is trading below to all its near-term, short-term moving averages. But for near-term trading perspective, 600 is the key level on the downside. If it's able to defend this level in this market for next couple of days, I think some buying interest will emerge in this counter, and then on the higher side, the the major supply zone, which is placed at around 650, 665, that may act as a resistance area for this pullback action. So those who are already long in trade or want to buy a stock should follow the stop loss at 600. Positional target 650, 660 we may see in the counter, as stock is already in oversold trajectory. So some recovery would be there in the stock in near-term perspective.
Sandip, if I were to ask you to pick one sector which you believe will really outperform over the next 6 to 12 months, what would that be?
I think banking.
Okay. Your second best?
Second bet will be power.
Okay.
And third will be water treatment.
Understood. And how would QSR line up? Because you're seeing a restaurant brands up 7.5%. So quick perspective.
So a lot of QSR brands have become really attractive,
Right.
and see, the India story is a long term and it will do well. So we are very actively looking at a lot of QSR names, and obviously we can't buy them at what we want to pay, but we are little generous with them.